Hi everyone. I'm Toby Turtle, the official mascot of STO Summit Spring 2025. We're excited to share the recorded sessions from the world's leading summit on security tokens and real-world assets. Now, let's dive into today's talk from one of our global leaders. Hey Augustine, over to you.
Let's hear from Thomas Labenbacher, CEO of Assetera, on tokenizing finance within regulation.
First of all, thank you for being a part of this summit. It obviously was a long day already, but a great summit. I had to actually drop out for one or two presentations, but what I have heard so far is really, how should I say? Not sure what I should add to this already great panel. I'm trying to make it a bit different, so hopefully add more or kind of contribute to your existing know-how to existing summit, what you heard so far already. Actually, one thing I wanted to mention here, I just came back on the weekend from Dubai, and normally what we have seen in these conferences was all about the crypto, and crypto. And these days we see that layer one cryptocurrency exchanges and large service suppliers like Fireblocks are not anymore focusing, well, they're focusing on crypto because they make money with it, but the future is definitely a security token. And whether it's a real estate or whether it's any other real world asset, I think even also numbers have been mentioned today. Anyone who is focusing on security token has a bright future. At least that's for us. Therefore, we are in this business for a couple of years already. And by that, let me start with the presentation, where we actually have received also two awards last year for our blockchain development, because we're doing this in-house apart from the licenses we have, which I'm speaking in a minute. And we got these blockchain awards because of we built over 2 or 3 years something which is a full DLT system on the Polygon chain and is working actually like a DeFi system. This slide might be a bit overwhelming, but it intends to actually show you guys, show the audience that we are working with the leaders in this space, coming from the Web3, but also certainly with those from Web2 and transforming into the Web3 business. On the one hand, we see Polygon, as mentioned, RChex, one of the biggest, or actually the biggest exchange in the UK, where we partner with on dual listing. We see Tokeny. We have a very long relationship where these guys are tokenizing and we are distributing and listing. Right now, working on a project for listing a large asset management token on our platform together with Tokeny. We do have a relationship with Republic, where we are adding actually the wallet of all the Republic users to our website. And last but not least, actually the recent, but I wouldn't say the most important, but for us, a very promising one is the announcement of the relationship with Ondo. And the Ondo global markets is something which is definitely changing the future and how we are approaching as an investor tokenized securities. Having said that, in a nutshell, and once more, Assetera is a decentralized EU-wide regulated trading platform designed for real-world asset on-chain. We are live since 2024. We have around 30 token on the platform. All of those are security token. It's either a native token, real estate asset underneath, or it's a tokenized security like a Coinbase Nvidia stock, which you can actually trade on our platform. We are holding a MiFID II license, similar to a broker-dealer license in the US, and a VASP registration. We got the MiFID license almost 3 years ago, and since then we are developing on our service and constantly, of course, improving it. In addition to our trading mechanism, Assetera offers also tokenization, the primary sale, meaning the distribution for large asset managers who are currently looking into this only, and certainly also the custody, as we do have a custody license for cryptocurrency. We're also using this capability for doing the custody, the technical custody of security token. Mentioned earlier, DLT fully on Polygon blockchain with atomic swap for clearing and settlement of a transaction, as well as we are working for retail and professional clients, meaning we got the license for both target groups for offering services on our platform. And for the issuers, we do also have, with the tokenization, a seamless solution to raise capital via our platform. Most important, last but not least, unfortunately, should be on the first here, but the team consists of great experience in the so-called Web 2.0, meaning in traditional banking and investment banking and fund management, as well as in VC and PE. Plus, the team certainly has experience in blockchain as well as in the Microsoft.NET programming. The title of my speech certainly is something with regulation, and therefore I put one slide up here is the regulatory compliance. That's basically 4 points what you have to consider in approaching this business. On the one hand, we already see a license foundation, at least I can speak for Europe, and there are similar laws in the US. But in Europe, we are now having with MiFID the securities law, which is basically available for years. We now have MiCA, which comes into force effectively by end of the year, and other regimes which are actually building the foundation for the full trading, the execution of transaction, and the clearing and settlement, as well as the custody. And we do have, just taking MiFID as an example, we do have different license scopes. You can have one license part, or you can have many. And the point here is that all these regulated services, all these licenses are basically a key driver for the existence or for the development of the various operating models. Whether it's your own license, whether you have an exemption of specific licenses like the MiFID or the CSDR, or you're running under a certain license umbrella by using your own technology or using a technology of the license company. That's extremely important. Why? Because what we have been doing the last 2-3 years, constantly changing actually the technology, the operations based on the market development by having a framework of MiFID and the WASP, which is basically not to be changed. So you had to move around how you're going to define your operating model, what you're offering, which hopefully and basically is fitting the client needs, and of course as a user experience which is not too crypto and which basically everyone can plug and play. And that's a super important part, and this has been giving us headaches the last 2-3 years. However, I think we're going to have not a breakthrough, but we actually know what we are doing, and we have a clear game plan, and this is what we are following. The third point is whenever you have a platform to offer products on your service, products on your platform for servicing the customer, it's all about the financial instruments. A security token is basically a financial instrument on chain. Means it's a financial instrument, and this clearly need to follow the MiFID law. And you have two options in this respect. The one is a token, a simple, straightforward native security token, means it has been put on chain with the certain regulatory information in place. Could be a prospectus for a larger bond, but definitely all these instruments, all these regulatory instruments and documents have to be in place. The second category is tokenized securities, where we have also on our platform a BlackRock fund which has been tokenized, and this instrument, meaning the documents are available, and you basically tokenize and keep track on getting extra liquidity and extra clients into the fund. The investment products basically is can be different things. Number one is the transferable security, and we are with the token, and we do self-custody. We see in a moment means you're gonna have at the end of the day the token in your wallet, a security token which you're gonna do a self-custody, and most important, you can use such a token for any other things like using as a collateral and make extra yield with any kind of stable coins. I think it's super important to have this discussion in a way that it's not all the time that you're gonna have a token for extra liquidity in your fund. It's not because of fractionalizing actually an asset. It's something also simply that this transferable security, the token you hold in hand, can be used for different things to gain extra yield. That's very much important, especially also on the money market instrument side, because money market is basically a digital cash, and you can use digital cash for anything, right? You have your money market, the yield of 5% or whatsoever, and you can actually do extra yield by using this token for anything and kind of using it as a collateral. Then you have funds unit, you have the commodities and certain also derivatives. There's almost no limit on the investment products, what we use from the MiFID law, and that therefore we're happy to actually list any kind of interesting instrument from a new industry like what we have right now from real estate, from IT, tokenized securities, kind of synthetic investment product. We are launching now a bond for oil reserves and having also other commodities. So really, we see, of course, some industries are having more speed and having more token, but basically we're looking into all of these asset classes and happy to get them on our platform. Number four are the technical prerequisites and limitations, I think, and I guess I heard a lot of them already. However, it's important that anyone is looking for multi-chain issuing, although by having, I don't know, using 5 chains and you think it's an extra distribution channel, I think it's not, because if you're gonna distribute in 5 chains, potentially what we have seen, only 1 chain is really having a liquidity, all the others don't have. I don't know why this is, but that's what we have seen. Then you have the cross-chain interoperability, which we had to actually develop and clear ourselves. We have endpoints to all EVM compatible chains and can actually use this token on our platform for distribution and trading. Performance is potentially key down the road, and I think also what Edward said earlier in this summit, a full-blown MTF operation, I also see by end of 2026 necessary, when definitely the institutions are coming in and do proper trading. I don't believe that a token with distributed to 4 or 5 institutional clients have a lot of trading. They just keep it in the wallet and that's it. So I do believe that first you're gonna see or have to see basically a small retail volume, but constant, so that institutional clients are coming in and start trading against this retail liquidity, and it won't be the other side, because I see that institutional clients first need to get into this business, like what we saw 5 minutes ago. Citigroup is partnering in Switzerland with STX on the issuing and on the custody side. Why? Because both is fee-based and there's no risk, and to be part of it and learn how actually this new industry, how the new infrastructure is basically working. Last but not least, costs and the scale is certainly something which is important for us. A transaction on our platform costs around 1 cent on Polygon chain, apart from what we charge, but Polygon is in this case okay. I do believe 1 cent plus scale plus performance, that's something which is definitely looked at. As a retail customer, you want to see the transaction cleared real time, whatever real time means, but not 10 seconds, but in 1-2 seconds. It's potentially different for market makers and insta clients. They want to see high speed and more latency. What does it mean for the market? And I'm going to focus only on parts which has not been mentioned today. We see that 1 in every 4 publicly listed security worldwide will be tokenized. So it's really see on the native as well as on existing securities a high tokenization rate. We see also institutionals putting up to 10% of their portfolio in tokenized assets. The good thing about tokenized assets, you can actually also structure in a way that's a security or in form of a stable coins under the MiCA. Therefore, we also do have both licenses, the MiCA and the MiFID license, because we're going to run any kind of asset which has an underlying on our platform. Currently, we are focusing on being the first decentralized trading platform for security token. Interesting is also that most of the digitized assets are held in private wallets. Therefore, we're going to offer self-custody where you as a customer connect your wallet, bring your assets, either security token on the one side and stablecoins on the other side, to actually buy or trade the assets on our platform. Before I go into my last two slides, as I said, I have something different for you. I'm going to show you a quick demo. Well, it's not a demo, it's a live system demonstration. As said, this is a live system. You can do your KYC, you can do this in 2-3 minutes. You get your passport and your ID verified and identified. You get a risk assessment for our system, and you can start running transactions on our platform, whether you're going to have stable coins, dollar or euro, and buy a security token, or you're going to bring security token, connect them, and offer them on our platform. Give me 1 minute, and I'm going to show how it works. Just demonstrating now a transaction. You're going to buy whatever quantity you want for a certain price. You can even also place an offer for bargaining. You buy now. Buy now means need to be confirmed with your wallet. It costs, what is it here? Even for high speed costs a 3-cent dollar. You just confirm that then transaction is successful. It's done. It's cleared and settled. You have it in your pocket, in your wallet. Then have you sold? You got your stable coins, and it's done. It's the finality. It's on chain. Everything is clear. There is no counterparty risk. Buyer and seller can, on the sell side, can even be also the issuer or can be the token holder. And this brings us to my final 5 USPs of why Assetera. First of all, a regulatory first approach. We're coming from this industry, we're coming from banking, and we do understand regulation. And the second thing is we have this dual licensing structure, MiFID and MiCA for cryptocurrency as well as for security tokens. Then we do have real assets at scale, because we can add what you saw. It was a couple of tokens, the 35 tokens on the platform. You can add in a day a lot of token on our platform and start distributing and trading. We have institutional grade infrastructure in place, and also important Europe-wide reach with the notification of our licenses throughout Europe. So we are able to offer our service in 30 countries, plus we do have a global vision. The conclusion for us is very simple. The more regulation doesn't mean less innovation and growth. It's actually the other side, it's the investor protection, which actually all of us need to be aware of and have to have in mind. Second thing, the trust, and this is important, between the seller and the buyer can change the ecosystem forever by not having any intermediaries, and by actually reducing the counterparty risk by having the blockchain for the settlement finality, and as a ledger, the reporting and reconciliation. And last but not least, we certainly do need incumbents. We need these institutional investors, but I do believe that they are not important as an investor, as a market maker as of today. They are more important as a partner in the ecosystem. And with the retail volume, we see the first liquidity in the market, and by that a liquid market, also institutional clients will start trading against it. Thank you very much for the invitation, and it was a real pleasure to have this presentation today.
Thanks for joining us at STO Summit Spring 2025. Stay curious, stay connected, and remember, the future is tokenized.